ShortMeTina.com with my daily recap. Today's Tuesday, so happy Tuesday. The week is moving along. Hopefully it's moving along nicely and smoothly for you. Before we jump in and recap the overall markets, let me welcome you. So if this is your very first time tuning into a ShortMeTina video, I'd like to say welcome. Do us a solid in the comment section. Drop us a comment, say hi, let me know your name, let me know how you found us. I usually respond. I want to say 99.9% of the time I usually respond. If you are returning, I'd like to say welcome back. Do us a solid also in the comments section. Let me know that you are back and you're here, and let me know how long you've been listening. All right, so let's get into the recap of the overall markets. Right now on your screen is the SPY, S&P 500 daily chart dating back to around 2017. So we're essentially slightly up to flat on the day, closed at $300.95. As I indicated yesterday, I don't think the market is going to move either to the upside or to the downside until we figure out exactly what the Feds are going to do in terms of rate cuts, right? So like I indicated yesterday, the last time the Feds met, they cut rates by about 25 basis points. Consensus has it that they're actually going to do the same thing during this meeting. And I feel once that occurs, then the market is going to react either which way. Ironically speaking, or strangely enough, or oddly enough, the market is essentially where it was in July, right before the Feds issued rate cuts. And what happened after that? Well, we had about 4 weeks of straight decline, and the markets, the SPY in particular, lost about 10%. Will that happen this time around? Well, time is always an indicator, so time will tell. So right now, what's setting up for me, I guess, is a very bullish pattern. Obviously, we are above that resistance level of around 293 to 295, which is good, and we've actually remained above it. So we've sustained that breakout, remained above that level for like the last 2 weeks or so, the last 7 or 8 trading days. So that's really what I'm paying attention to. Once we decide, or once we figure out what the Feds are going to do, let's see how the market reacts. If it remains above 293 to 295, for me, that is your cue that the market wants to trend higher. Obviously, if we pull back and we cannot get above that 293 to 295 level, then perhaps the market will once again, like it's done for the past 2 years, remain within its range and maybe pull back to support. We can call that level around 260. We're not there yet. Right now, the market is trading above that resistance level of 293 to 295, and so for me that is a relatively sort of bullish setup right now. But you know, these bullish setups can quickly turn not so bullish and bearish in the blink of an eye. So for me, it's kind of like there's actually a lot of, this is actually a side note, but there's actually a lot of stocks that are setting up. You know, the market just needs to do what it has to do. So this week I said, you know what, I'm gonna hold back on initiating any new positions until I see what the market wants to do. And I hope the market actually wants to trend higher, because as I've always, or like I've indicated before, the money's, in my opinion, really is made on the long side. So I'm really tired of this range. It's been fun while it lasted. I want to, for the market to actually venture into new territory. Yeah, I do. Even though I'm still short, I would like for the markets to venture on and hit new all-time highs. But like I indicated before, time will tell. What else do we have? All right, and then we have the IWM daily chart dating back to around 2017, so about 2 years worth of data, slightly down to flat on the day, off about 0.27%. I see a quote here of 157.48. So the last, so we've actually had a nice rally since the market actually hit support towards the ending of August. Market hit support around that 144, 145 level. I told my premium members, if history is an indicator, it makes 100% sense to actually go long at that point. Hence, we went long, and so within that short period of time, we were able to actually capitalize off of this channel, off of this range. And when the market most recently hit a high of around, I believe it got close to like 159, up about 10 or so percent in a few short trading days. So that's good. Since then, the market has pulled back, to be expected, because again, it has hit that resistance level that has served as a wall for the past about 2 years, that 160 level, right? You can see it here, 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 about 7 times. You can count the arrows yourself, or plot them in on your chart, and you'll see that every time that the market actually got close to or slightly above that 160 level, it usually sells off after that. So this pullback here is to be expected. However, heading into this Fed meeting, right? If whatever is said is to the market's liking, the fact that we're sitting here, for me, it's actually a really, really good setup, right? So if things go according to plan, and the market actually catapults outside of this range on volume, that would be, in my opinion, that would be the cue to really sort of buckle down with your long positions, because again, we have not traded outside of that range for a very long time. But let me say this: I shouldn't say that the minute it breaks above 160, you should buy hand over fist. That's not the most responsible thing to say. It's all about sustainability. The market has to sustain that move, because we did, if we go back to May, right, we did kind of like penetrate that 160 level, but it was quite short-lived. I think we only remained above that level for about 2 trading days before having this huge pullback here. So it's not even just about breaking out of that range, although that is a good sign with confirming volume. You want to see volume like what you're seeing here, but it's also about that sustainability. You want the market to sustain that move. So for now, sitting on my hands until the market tells me otherwise. What else? All right, and then we have ticker SNAP Snapchat daily chart. Stock is up north of 7% on the day. Huge move from the December lows of around $4.96 to the most recent peak of around $18.36. The stock is actually up north of 300% in under a year. Nice movement with Snap. And you know what I've been saying before, at some point, I believe this stock is going to revisit at minimum all-time highs of around $29.44 before heading on and moving up. And right now, for me, things are unfolding rather nicely. So most recently, again, we peaked at around $18 before pulling back. I thought that was actually the prime opportunity to add to an already existing position. Did just that, and the stock is up about 10 to 15% in about 2 to 3 trading days. So huge move, nice winner for us in the premium member community, sitting here at $16.83. Today's high was what did we clock in today? We went as high as $16.90. So it is actually kind of like perking up for me. Right now, I want to see a really strong move above that $17 mark with volume. Perhaps even retest this high of around $18.36. And if we can do that, right, if we can make a strong move above 17, it's like kind of shaping up that's actually what's going to happen. Make that strong move above 17, retest the most recent highs of $18.36, which is around here. Perhaps even get above that level and hold that mark, hold that $18 to $17 mark. I see $20 in short order. Obviously, I'm gunning for that $29, $30 print, but obviously we have to pass certain hurdles and certain milestones. And for me, the next milestone and hurdle for us to pass would be that $18 mark. If we can do that with ease, and again, it looks like it's setting up to do that, I see $20 in 2019 for Snap. So sitting here at $16.83, you still have about $4 or 4 points of upside. So put ticker SNAP on your radar, on your watch list. I am liking price action right now. What else? All right, and then we have Zynga up north of 3% on the day. I see a quote here of $6.04. So once again, it seems as though the stock is gearing up to, at minimum, retest the most recent 52-week highs of $6.65. So I have been very vocal on Zynga. I've been vocal on my bullish stance. Even when we had this pullback here to around $5.50, I said, well, you know what? Yes, we had a pullback. We're breaking down on some levels, but overall, the overall picture still remains intact for me. The overall picture still remains bullish. And yes, I am long. We went long Zynga in the premium member community when the stock was trading at around $3 to the low to mid threes. So sitting here at 6, nice huge gains. My thing is, it's always great to add to your winners. And I think Zynga is actually unfolding for another trade setup here. So make sure you have Zynga on your radar. Make sure you have it on your watch list. Yes, I still see this stock hitting around $8 before 2020. Obviously, for us to get there, I think at minimum we need to get above 52-week highs of $6.65. If we can do that within the next 4 weeks or so, for me, you'll know you're on the right path. All right. So Zynga, I like it. I hold it. Still like it. I still see $8. What else? All right, so we have ticker WINS. Let me do a follow-up. I did a video yesterday, and while yesterday was the stock was a huge winner for the bulls, today it's off about 27%. Let me just walk you through briefly. So I believe, and you can listen to the video that I did yesterday, I said, obviously, the one of the main things you want to do is pay attention to how the stock actually opens up, right? If it opens up below the previous day's close, not a good sign. If it opens up above the previous day's close, you're on the right track. So where did we close at yesterday? We closed at $27.40. Where did we open up? We opened up at $25. So the fact that we actually opened up below yesterday's close, couldn't even reach yesterday's close of around $27, should have indicated to you that the stock actually wants to pull back. So we pulled back, going as low as $17.50 to close at $20. So same thing, if you're looking to go long, seeing whether or not the selling will continue. Pardon, where was I? So yeah, heading into tomorrow to see whether or not the selling is going to continue. Pay attention to the same thing. Close at $20 today. See where the stock actually opens up. If we open up below $20 and we take out today's low of $17.50, not a good sign. More than likely, the stock will continue to pull back. All right. So that's what you should be paying attention to. What else? All right, ticker GBR, same thing, follow up to yesterday's analysis. So right now what you're looking at is a daily chart dating back to 2018, but let's just focus in on price action the last 2 trading days. Stock is off about 27% on the day. I see a quote here of $1.84. Similar concept, right? I said today, whether or not the stock is going to run, you want to pay attention to how it actually opens up, and it needs to open up above the previous day's close, right? That closing price, super important, believe it or not. So yesterday we closed at what? $2.51. Today we opened up at $2.35. So we opened up actually below yesterday's close, not a good sign. And then we actually took out yesterday's low. Yesterday's low clocked in at 195. We actually penetrated through that. That should have told you all you needed to know. So we closed here at 184. Today's low clocked in at 183. Another pointer. When a stock closes close to the low of the day, chances are the selling will continue into the following trading day or the following trading week. And the fact that we closed at $1.84, just a penny above today's low, tells me that the selling will continue either into tomorrow or the week. So pay attention here to this gap of around $1.62. I think at minimum we filled that this week. So in the shorter term, I am bearish on ticker GBR. What else? All right, so let's wrap it up and round it out with ticker ACRS, daily chart dating back to 2018. But let's really just focus in on this gap up here, price action today. Stock is up about 63% on the day. So huge congrats to the bulls. Stock went as high as 208. Pulled back to close at $1.80. So you're probably asking yourself, well, is this a stock you should jump in? Does it have more room to run? And the answer to that question is possibly, possibly not. So you want to pay attention or look for signs and clues to either tell you, well, momentum is still continuing or it's kind of like fading or waning. So for me, one of the things that I tend to pay attention to see whether or not momentum is continuing is how the stock closes and actually how it opens up the next trading day. So we know that it closed at $1.80, right? The low of the day clocked in at 161, so we're slightly above today's low. That's decent. So then you pay attention to volume here. You can see here it seems as though there was a lot of unloading. So that's caution for me. And so heading into tomorrow, you want to pay attention to how the stock opens up. So if we open up above 180, we can sustain that move. We take out today's high of around 208. Chances are you can potentially see the stock run to around $3, and be mindful there's a gap here to be filled at $4.32. So that's a possibility. However, if we open up below 180, we take out the low of 161 and we can't rebound, more than likely you're on your way to fill the gap at $1.12. All right. Hope that makes sense. If not, just replay it and it should make sense after that. All right, so let's cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do three things for me. One, comment in the comment section. What do you think about my analysis? Two, I do videos Monday through Friday. If the stock market is open, you can expect a video. If you do not want to miss any, ensure that you are subscribed at our YouTube channel at ShortMeTina. And lastly, my friend, I've been trading for well over 15 years, long time. So if you think you can learn anything from me, then definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support.